Okay, folks, welcome to Thursday Night Stock Charts Live. We're going to be talking about bearish key reversals and what it means for the overall market moving forward. The price action today was just simply horrific on so many levels. I can't even put it into words. We can only go until about 6 o'clock tonight. I do have a conflict, so I'm going to keep this within a half hour. So let's begin with earnings. We own Coinbase. They reported after hours. Good to see that they're catching the bid up nicely. So we're probably going to be, I don't know if we're going to be adding more right now of anything. So I'll come back to a strategy in a moment moving forward. Now, we had earnings come out of these names here. Amazon. Missed. Intel. That's not Intel. Intel. Destroyed. What was the anticipated market maker move here? $2.37. Anybody who sold puts is poof, wiped out on their position. Microchip Technologies. I don't know what they reported, but they're pretty much unchanged. What am I missing? Amazon. No, Apple. Apple reported okay numbers, but they're taking it down in the after hours session, possibly something having to do with forward-looking guidance. They're going to make significant investments in AI technology. Who's this good for? NVIDIA, AMD, SMCI. This is all I care about. Investment in technology, and that's what we want to own. So on this pullback, we're looking at this as an opportunity. So let's begin with, I got to really keep this brief. Okay, the question to ask nowadays is good news on the economy no longer good news for stocks? The answer is quite probably no. The reason is, what kind of data are you getting now? It's not a miss on PMI. It's not a miss on services. It's not a miss on consumer confidence. It's this. Initial jobless claims, they continue to trend up. That's the problem. And tomorrow, we're going to get the employment report. So my guess is that they're going to beat on the headline, but they're going to revise down the prior reports. That's what they've been doing for the past 3.5 years. So if you haven't been paying attention, pay attention. And any growth in the employment numbers are coming from net government jobs. That's it. And probably healthcare. That's it. Fed's balance sheet, they continue to drop it off. So let's talk now about what happened today. Change to the expectations of an ease, no change, unch. So what happened today is that we got the poor economic data. It is now August the 1st. We're pretty much guaranteed as a lock. September is a go date for rate cuts. So if that's the case, and we know that the first rate cut is usually the top for the equity markets, are we seeing the markets getting prepared a little bit early? It's quite possible. So yield curve. Last night, it was down. Today, it is up. So let's take a look at how we close out the month. Here's the yield curve weekly chart at the highs of the week on the month last month. We broke out. Yes, we have a topping tail, but we gapped up and into, assuming that we close this month at where we're at or better, we gapped up into the tail. That's usually, or wick, or whatever you want to call this line on top of the candlestick body. When you gap up into it, it implies that there's buying pressure. It means that this rally, in all probability, is going to continue, and we know that's negative for the equity markets. History has shown us that. The CRB Commodity Index. So what happened yesterday after the Federal Reserve announced that, we're worried about jobs now. Inflation is not really our concern. So what they did is they guided the market towards a rate cut. They told us, in no uncertain terms, you're getting a rate cut. What happened to the CRB Commodity Index? It gapped up. Why? It's inflation. We were breaking down. Now we have recaptured support on a weekly time frame, one trading day left to go. Maybe it'll fail, but right now looking pretty bullish. Yields broke support on the week, not just by a little bit, by a lot of bit. We haven't had a 3 handle on the 10-year yield since when? Jesus. January of this year. We now have a 3 handle. We closed out the day 3.97% on the 10-year yield. So what does that tell you? Well, it tells you that the economy is slowing dramatically. And it's being shown in the earnings reports. Think about what Intel announced here. Let's take a look at their announcement. If my browser will cooperate. There we go. Oh, Christ. Intel to cut 15% of its workforce. That's 15,000 employees. And we're not talking about janitorial staff. These are high-paying jobs. So this is a very, very bearish news item for the economy as a whole. These are high-paying jobs, and they're gone. 15,000 of them. Let's get back to the weekly charts. Bitcoin, not much happening here. Skip that. Bond prices. All right, so when the yield curve uninverts, breaks out higher, money goes into bonds. All right, so it's following the exact course that one might expect it to. Higher lows, higher highs, and a breakout, continuation breakout. This is a buy. This is a screaming buy on the TLT. Money is going into bonds very, very heavily. Why? Fear. Volume. It's Thursday, and we're already at moving average. We're going to close out tomorrow probably above the moving average. Let's take a look at what they did on the day out of curiosity. On the day, this is a weekly chart. I know that was weird. On the day, big gap up and into the 3rd standard deviation Bollinger Band. We're going to get a pullback here in the next couple of days. Look at the volume today. This is the highest volume bar to the upside anyway since February of this year. Think about it. Tips on the week up 0.86%. This is a big move. So why are tips up? Tips are up because the Federal Reserve is letting loose the hounds of inflation on the economy. There is going to be a price to pay. Now, think about it. You have, granted, yields will go down for a time. But inflation is going to creep up. Unemployment is going to creep up. So you have unemployment on rising inflation, and they're cutting rates, which is supposed to be the tool to fight inflation. This is going to be so bad. The dollar. Now, the dollar is only up 0.12% on the week, and on the day, it was up, but it's really sloppy price action. You know, if you're a international investor, you know, you have the Bank of Japan tightening yields. Would the yen not be a better bet than the U.S. dollar, who's going to be certainly cutting rates? I think that's the better bet. Let's take a look at the yen and euro. We'll start with the euro. Euro is down on the week. They have their own problems with inflation. Yen up on the week. Look at this move up higher on the yen. Ripping. This is where I want to be. The Bank of Japan is fighting inflation now, finally. The United States just surrendered to inflation. The Federal Reserve, what they did yesterday was they said, Jay Powell said, you know, we're happy with where we're at with inflation. So what, the 2% target? Don't worry about that. Don't look there. I didn't say anything about that. We're good here. We've beaten inflation. We're so happy with the way things are going. Well, we're worried now about jobs. So we're gonna flip the switch here a little bit. We're gonna claim victory, and then when inflation comes back, oh, we had no idea that it was gonna come back. They're gonna play dumb. So stagflation is here to stay. Stagnant growth or recession, even worse, with inflation. Volatility. It's looking very strong here. I mean, if we close out the week like this, they say you can't chart volatility. I can. You have a series of higher lows. We have a breakout above resistance, and we have broken out, and we're poised potentially to close above a resistance level at which we have not been able to close above since here, October of 2022. So watch for this downtrend to potentially be in the rearview mirror. And we've gone from putting in lower highs and lower lows to now putting in higher highs and higher lows. That's bearish for equities. Dow Transports, bearish reversal bar on the week. And on the day, bearish engulfing of the prior day's move. I knew, or I figured last night, we talked about this on Market Wrap, that the transports were going to pull back. No great shock. I didn't expect this. We were prepared for it. We still kept some shorts on the table. We took some off early on in the week, and that acted somewhat as a hedge. But it looks as though on any counter trend rally here, we're going to need to add back to the short side. We took some longs off the table. But what we did yesterday, I'll talk about what we did yesterday when we go to the Qs. We'll talk about strategy moving forward. Dow Jones Industrial Average bearish, key reversal on the week and on the day. Not exactly a bearish engulfing. Folks, if you're not familiar with this terminology I'm using, 5-part video tutorial. It's my top 5 favorite candlestick patterns. Not linked below, but it soon will be, because I forgot to put the link there. Let's do that before people start flipping out. Let's update this. Paste. Save. All right, that link is below for you. 5-part video tutorial, free of charge, gratis, if you will. Gratis. Alan, welcome. Thank you, sir. Appreciate that. As always. Yes, hope all is well. Thank you. My head is spinning after the 2 days. Yeah, I don't blame you. I'm probably not going to have time. I got to log off at 6 o'clock tonight. Yes, if we have a moment, I definitely will do it. But I have very, very limited time. DZ Barton, welcome. Okay. SPY, weekly view. No new weekly lower low yet, but we're rolling over. Double top on Stokes. Outside reversal bar, extremely bearish. Now, going to the Q's weekly chart, new weekly lower low. We covered some shorts early on in the week. And well, how's volume on the week? Volume is going to be about average. And yesterday, I did some buying here. Actually, we bought some TQQQ right at the bottom here. That's a leverage product putting you long of the Qs. We covered shorts at the lows. We saw the market beginning to bottom out, hook up. We went long. So yesterday, I didn't go adding more to that position, but we bought Boeing. We bought NVIDIA, which hit our price target. We bought common stock of SMCI. But today, when I took a look at I shouldn't say today, last night, I was looking at Qualcomm. I was looking at all the earnings reports that came out. And you see that Qualcomm moved up strongly. And it had great bottoming tails here, really, really nice. But then all of a sudden, later on in the evening, we started to fade. That usually doesn't happen on a positive earnings report. So that was kind of like, that was kind of like a tell. But I looked at the SMCI. That was up almost up to, what was that up to? SMCI. Yeah, that was up to around, no, this is not right. This is not right. Oh, it's a 15-minute chart, that's why. 4-hour chart. Okay, so last night, we rallied up and into roughly 730 per share. But then when I woke up this morning, we were drifting lower. So we were long of a call spread. And I said, you know what? Before this thing goes red, I have profits here. It's not huge profits. We have profits. I'm raising cash because if I bought a little bit of the common stock that I could hold on to. So it wasn't a big position we put on yesterday. So I can hold on to that. Once I see it bottom out, I'll buy more. It's one of the best of breed names. Note what these reports are all having common, whether it be Intel to Apple, Meta to whatever company you choose. They're all investing in AI. Who gets paid? NVIDIA, AMD, and SMCI. All right, they're getting paid despite the fact the other companies' earnings are declining. So while those share prices may pull back, we're going to use it as an opportunity due to our cash position to take advantage of those dips. But those prices could be measurably lower from where we're at right now. So today, I do not think is the dip to be bought. I think right now, any rally is probably, depending upon the way we close, is an opportunity to short the market. I will address it a little bit further in a moment. Let's go back to the weekly charts. So here are the Qs. We are in a downtrend channel. I didn't draw this line tonight. I didn't draw it last night. I drew this, I don't know. Oh, no, I did this last night. It's a daily chart. I did this last night. I'm sorry. So we redefined. I changed the line from being down here to up here. So I said, you know what? This is our upper band of resistance now. We don't want to get aggressive until we break out above it. The problem is that we faded. And once we took out the lows of the day, TQQQ went off. We started raising capital, took half of our Boeing position off the table. The only reason why I bought Boeing was because they had a new CEO. The shares did well yesterday despite poor earnings. They've been holding up well with horrible headlines, yet the shares took it on the chin today. It's going to be an opportunity longer term. They needed a new chief. They need new vision. So now is the opportunity to start buying the shares when nobody else wants them. That's the contrarian way. So I will not be buying back tomorrow the shares that I sold today, even though they're lower than where I sold them. Why? It can go a lot lower. TNA, small caps, bearish key reversal bar, down 10. This is a leveraged product. So divide this by 3, down on the week. And we spoke about this chart last night, the daily chart of TNA. So the question that was asked quite frequently yesterday was, do we buy more here, given the fact that yesterday was such a positive day? The small caps have been performing fairly well. My answer was no. And I was right, but for the wrong reason. Let me elaborate. So my hypothesis was that we were going to see rotation out of the small caps into the mega caps. We did that yesterday, right? You saw fading Dow Jones, you saw fading on small caps, saw fading on mid caps. However, the triple Q names did very, very well. Big gap up, close strong. So it always pays to wait for the breakout, because had we hoped and bought here in anticipation of a breakout, we would have been down nearly 10% on the day. So it doesn't pay. It really doesn't pay. It pays more to pay a premium to validate the fact that you were right in your initial assertion that the shares are moving up by the breakout. Right now, the shares are broken down. I'm a seller here. If we get a rally back, we have a small position here, I'm out. I'm dumping. I'm raising capital. Now, let's go back to the triple Qs for a moment and talk a little bit about strategy. 30-minute chart. We left the day pretty oversold. You caught a bounce. This can continue further. So what I want to do is I want to milk as much out of the upside as possible. And then as soon as we begin to see the fade on the market, we add to short positions. Because this type of price action, again, going back to the daily chart, having gapped up and then having reversed and engulfed the prior day's move, that is very, very bearish stuff. This is a continuation breakdown pattern. The path of least resistance is now gone from up to down. Semis annihilated. New weekly lower low. What do they do on the day? They're going lower. Short the semis. Biotechs. Stuck at resistance. Do not buy them. Avoid. They're stuck at resistance. 3 sequential weeks. Avoid. They're still holding daily support. Don't get lured in. We need to close above weekly resistance for the biotechs to be a viable investment. Staples doing very, very well. Money's going into the safe haven names. Discretionary names up on the week. I can't believe they're still up on the week. Emerging markets breaking down. Dollar up. No good for emerging markets. Bob, how do you feel about RSI divergence from price action as a reversal indicator on lower time frames like 4 hours and 6 hours? I don't use a 6-hour chart. I never have. I have used a 4-hour chart. A 4-hour chart I consider to be the little brother of a daily chart. I think that it's significant. When you get down to a 5-minute, a 15-minute chart, not as significant because you don't have a lot of data there per se. But a 4-hour chart, that would be my starting point for where I would take a bearish divergence on a stock in either direction, bearish divergence, bullish divergence, quite seriously. So good question. I'm sure if you use a 6-hour chart, if it applies to a 4-hour chart, it's going to apply to a 6-hour chart. But I think that you have a lot more eyes on a 4-hour chart than you do on a 6-hour chart. So that's why I would favor the 4-hour chart over the 6-hour chart. Remember, this is all a game. Despite the fact that it's technical analysis, support and resistance, it's all about whose eyeballs are on what support level on a certain time frame. It matters. Don't let anybody kid you about that. Energy, bearish, key reversal bar, bearish week. Yesterday's price action is now in the rearview mirror, negated. Oil, what did it do on the day? I really care about the day. It was a strong day yesterday. We're still holding yesterday's lows. So I'm going to hold on to energy stocks for right now. Weekly chart of gasoline down fractionally. Natural gas. Wow. Outside reversal bar. This is going lower. Wow. Let's talk about gold. Gold is still up over 4% on the week daily view. Up but fading. New all-time record closing highs today. Nobody wants to talk about that, especially the Federal Reserve. They hate this chart. They hate when gold is up at all-time highs. And you ain't seen nothing yet. This is nothing compared to what you're going to see. Because once the dollar breaks, you're going to see gold take off. It's going to rip along with silver. Now, here's a danger area. A lot of people think that if gold goes up, so do the gold stocks. They usually do trade in tandem. The only time they don't, generally for any length of time, is fear in the market. When you have selling in the broader indexes, margin calls go out. Most people aren't going to do what we did here. They didn't go into the week with having a short position. They didn't take losses today, even though I bought yesterday Boeing. I bought early in the week TQQQ. I took a loss on half a position on Boeing. I was wrong. I was wrong. Small loss, live to play another day. TQQQ, we didn't let that gain turn into a loss. Most people aren't going to do that. That's the key to the game, though. So what happens when the computers start firing off at 2 p.m. because people aren't meeting their margin calls? There's going to be what you call forced liquidation. And they're going to sell anything that can be sold is going to get sold. The winners on voluntary terms, the behavior of the average investor is to sell winners first and hope that the losers come back so they don't have to take a loss. That's what you call stinking thinking. Don't do it. If you got a loss, it's not working for you, consider lightening up. Even if it's half a position, raise capital. Do not let your brokerage firm become your senior partner. If you're on margin, your brokerage firm is in fact your senior partner. Don't let that be you. So back to the mining stocks. How did they perform today? The GDXJ, the junior miners, were down over 2.5%, engulfing or nearly engulfing yesterday's price action, while gold was down a little bit. You see the relative underperformance of the gold stocks on down days. Doesn't mean that gold can't go down. It just means it won't go down as much. It's not as liquid. I have physical gold. What am I going to do? I'm going to pick up my gold. I'm going to wrap it up. I'm going to send it into Shift Gold. And what am I going to do that for? It's not as liquid as a gold stock. I would rather sell my gold stocks, book profits there, rather than sell my gold, which I know is going to have longer term. It's a store of value. I'm better off holding on to it. I can always click a button and buy the gold stocks back at a lower price at some point in time in the future. What else do we have here? Silver. Up on the week. On the day. Down on the day. This is a leveraged product. So let's go to SLV. Non-leveraged product down 1.42%. So how much do we have to go here? Morgan Stanley, our banks, we have a tight stop here. A break below 181, we're out. We're going to book profits, make it real. SMCI, we're still holding on to. They have earnings coming up soon. I'm going to leave it off here. Oh, Larry. We who own Amazon welcome your prayers and words of encouragement at this time. Okay, so let's talk about Amazon. To do Amazon, we need to go to a Bollinger Band squeeze format for the conversation. And we're going to go to a weekly chart. So take note of this, Larry. We know that a Bollinger Band squeeze, and for those folks that are not familiar with what the hell I'm talking about, what we're looking at, I got to find a different name for it. What we're looking at here is in black, the Bollinger Bands trading within the Keltner channels on a weekly chart. Now, this could fire off in one direction or the other, up or down. But what this setup is implying is that we have a tremendous amount of energy built up, consolidation built up. Of late, the bulls have been the beneficiary the past couple of weeks. However, this is not a very bullish chart. Now, during a bull market, one would assume that this would fire off positive. However, as we broke down below weekly support 3 weeks ago, and ever since it's doing the typical check back, retest, in all probability, it's going to fail. So if you're a long-term holder, you don't want to take the tax loss, fine. At least sell covered calls, buy some puts, protect your position. If you just bought it, maybe you want to think about keeping a very tight stop, maybe below 176.80, because if we break 176.80 and we close there, we're going a lot lower. So that would be my suggestion. Let's take a look at what AMZN is doing in the after-hour session. It's down about $10. So we're already down below that technical support level. So in my book, and I know a lot of people aren't going to want to hear this, it just became a short. Okay. Are you still worried about stagflation? Markets sold the reflection trade and switched to a recession trade. I'm using the word stagflation to be non-hyperbolic. Could we go into recession? Absolutely. I wouldn't be the least bit surprised. We're going to leave it off with ES, who's always a good participant. So we don't want to leave him hanging. This is a stock that should probably be sold. We are at resistance. How do we know there's resistance when you're at all-time record highs? It's simple. Take your crayon out. Connect the dots. You're at resistance. If you want to get even cuter, here. Then you want to tighten it up even further. Here. You got to sell this. This is to be sold. If they have options, maybe you want to think about selling calls if you're very bullish on it longer term. And on all these charts, consult your financial advisor. Let's go daily view. You're stalling out here. Me looking at the weekly chart, it's all I would need to look at. I'd be a seller on the news, just like we sold SMG. I have a lot of trading friends that were making fun of me. I didn't lose. We booked profits yesterday on Scott's Miracle Grow. This appeared on our scanner. And we made like about, I don't know, 16%, 15% on it. And we got out yesterday. And thank God we did. All right, folks, I got to blow. Thanks for being here. Sorry I got to cut out so early. But we'll get back at our normal time on Sunday night. everybody catching us on the replay and those watching now, please